Hello, this is Brian Shannon from AlphaTrends.net. Today is Tuesday, the 22nd of April, 2008, and markets closed. S&P 500 lost 82 cents today, or about 0.6%, as it continues to consolidate under this important level of what's been resistance at about the 140 level. So we can see that it's looking just like a little bit of a normal pullback. Yesterday we saw that the market was actually up just slightly, but we had seen a real drop-off in volume. Today we saw a little bit heavier volume, but it was encouraging to see that at the end of the day the buyers did come back in and were able to push it back above the average price for the day, or above that daily VWAP. When we look at a 10-minute time frame, you can see that the area where this market found support was the level that we've been looking at as potential support because it was so important as far as resistance on the way up, and that's the 137 level, 136.80 to 137. That level of support was further strengthened by the fact that we have this rising 5-day moving average in here, and also based on this being a approximate 38.2% retracement of the recent large rally that we've seen that began here on the morning of April 15th, those lows up to the highs of the 18th. So right now we've retraced about a third of that. A 50% retracement would bring it to 138, and 135 basically would be a 61.8% retracement. So yesterday we saw that the market, finished on a strong note, but this morning's gap brought the market down below yesterday's low, and that's where we were looking for an area to get basically a little bit more defensive, as this market has been extended. If it made a lower low, that tells you that it's time to be more defensive. Look for the pullback to, continue down towards that next important level where you would expect to find support. Support was found there, so that's good for now that it seems to hold at 137. And again, the daily time frame, we're still seeing a lot of bullish activity here, with it remaining above the rising 10, 20, and 50-day moving averages. The only reason I don't get aggressively bullish in here again is because this longer time frame, the weekly time frame, is still looking like a mess with a declining 20-week, 30-week, and 40-week moving average. So that's a 100-day, 150-day, and 200-day moving average are still declining, and that's a good reason to still just be somewhat cautious in here. In particular, when we have such a heavy release of earnings, the earnings calendar this week, with again over 600 companies reporting earnings this week. So the S&P holds up at that 38.2% retracement level. I think that you want to continue to be defensive in here. If the market can recapture 138, then maybe we're going to have another test of that 140 level, and perhaps that'll be the time where this market is able to break out and perhaps go up and test some of these levels that we've identified recently. And this, this area here at 144 or so takes on added significance also, because it's this level of prior support. It's also the approximate location of the declining 200-day moving average and this longer-term trend line. So a lot of reasons still just to take it, I think, more on a stock-by-stock basis. And looking at the Russell 2000, again, the major level in here, I'm going to continue to point it out because it's very important, is the $73 level. 73 has been basically what's defined this bear market here on a weekly time frame. That's where that first lower low came in on the weekly time frame. On the daily time frame, you can see we've got this downtrend line that this market came up to a couple days ago, and excuse me, and also of course the $73 level just above it. Now today, this market was the relative loser in here, losing 1.8%. You can see it came down right to that conjunction of the 10 and 20-day moving average. Actually got almost down to the 50-day moving average intraday. So when we look at the 1-minute time frame, although not as bullish looking, we did see that the average price was actually lower than where this market closed. So that is, can be considered bullish in spite of the fact that it was down 1.3%. Today's activity, the average participant who purchased is in a winning position. When we look at the 10-minute time frame, we're starting to see something that looks a little bit uglier, in my opinion, and that is, basically this 70-50 level should have been an area in really 70-25 to 70-50, and we're kind of right back in there. But this market obviously made that lower low here on the 10-minute time frame. came down, tried to establish support here at 70.5, but we saw another leg lower, and then the market did come back somewhat during the course, later in the day. However, this is just a lot worse looking, and you can see that the depth of it relative to the recent range, that is the depth of the correction relative to the recent rally that we saw in here that began the lows of the 15th to the highs of the 18th. It actually came down to that 61.8% retracement. So whereas the S&P 500 was only retraced about a third of its gains, the Russell 2000 was relatively weaker. So there's more selling in the smaller caps right here on this rally at least. And this is an important group for the market. I think you want to be cautious on this group because we've got this level of that's been acting as support and resistance a couple times in here near really 70.5. I think is the more important level. Getting back above 70.5, maybe it begins to stabilize a little bit, but now we've got these potential levels of resistance at this prior support here near 71.30 or so. So the Russell 2000 daily chart still looks pretty bullish. We need to see a little bit of stabilization and healing in here before you can really, I think, confidently go back in and buy. So a lot more reasons to be defensive on this group. The financials were down 37 cents, and yeah, yesterday we saw that important 26.20 level was broken, and that the market remains below that 26 to 26.20 area in here that has been so important. If we look back here at the 2-hour chart, where each one of these candles represents 2 hours, you can see that this is an area where there's been a lot of activity and a lot of battles basically being formed in here. The the major level of support for this market right now should be found at about 24.40. I don't think it's going to get down there, but if it does and then it fails to hold, then we've got a bigger problem on our hands, and we may in fact go back to test these Bear Stearns lows. But the this downtrend line remains important on this 2-hour chart, and if this market can get back above 26.20, maybe it goes up here and tests this level, and then is able to squeeze the shorts a little bit, as it would put this market back above this declining, this downtrend line that's been so important to the market. And once again, we're back below the 50-day moving average. But realistically, when you look at this recent action on the daily time frame, and you look at the direction of these moving averages and how they're crossing back and forth above and below each other, what that means is there's a lot of indecision in this market. An indecisive market really means there's no reason to trade that market until we have more clarity on that time frame, or switch to shorter term time frames and decide to trade down there. Right now, this 25.50 level seems as though it may be an important support level. If that's broken, then maybe we're going to see the test of 24.40. I think you want to see, again, a move back, though, above 26 to 26.20. Moving back above that level would allow for maybe the potential for a short squeeze. But again, this daily time frame is saying it's just a big mess. As far as the NASDAQ 100 goes, this was down 1.5% today with its 70-cent loss. It does remain above the $46 level. The market came down and tested that in here today. So it's good to see that the $46 level was tested and is held, at least so far. That's also where we found that rising 5-day moving average. And so that adds significance to it. Yesterday I had said that basically if we break below this 46.50 level, then you want to get a little bit more defensive, maybe take some profits, sit on the sidelines, and wait for a better entry point. And right now, I think getting back above 46.50, that's where that better entry point on the long side would come back in the NASDAQ 100 again. But we continue to see that there's bullish action in the NASDAQ 100 on the daily time frame. And again, I'm just going to point to these potential levels of where this market could get going if somehow something becomes a strong catalyst for the buyers to come back into the market aggressively.